Good afternoon, everybody. Welcome to the December daily Q&A session. I'm Rachel Neighbors. You are here for the Neighbors Group and Solo401k.com Q&A session. What day is today? Today is Tuesday, December 29th. We are so glad to have you here with us. And we do have some pre-submitted questions. So we're going to go ahead and dive into those first. The first pre-submitted question comes from Motiram. Motiram says, given that you said the IRS is closed for 2020, you mentioned about a temporary EIN. Will I need to fund my 401k account in 2021 once I get my federal EIN? Yes, Motiram, you are correct. The IRS closes the last week of the year every year. During this time when the IRS is closed, we give you a temporary placeholder tax ID number. When the IRS reopens next week, we will get your tax ID number for your 401k plan, update your documents so they have your original effective date of December 2020. And at that time, you can make your contributions. Excuse me. Remember that according to IRS publication 560, you have until tax day to deposit the contributions for your 401k plan. So Motiram, for your first question, yes, you can fund your 401k account for 2020 contributions once we get your new 401k tax ID number next week. Question number 2, my wife is not part of my company, but can I add her as a trustee to the account? Yes, you can. It's possible to add a spouse as a co-trustee. Now, usually, Motiram, when people are asking me about adding a spouse as a co-trustee, it's because you want to make sure that a trusted contact can take over, God forbid, if something happens to you. In this case, instead of listing your spouse as a co-trustee, what you might do instead is list her as a contingent successor trustee. So what I'm going to do is I want to log in to the 401k dashboard, and then I'm going to share my screen with you. Okay, Motiram, you should be able to see my screen now. This is just like what you see for your solo 401k dashboard. And I want to draw your attention to the signature pages. So this is a really important document for you. The 401k plan signature pages are all of the pages in your 401k that require your signature. Now, I know we've gone over this a couple of times, but in case you're new, it's really important that you read through this document. We tell you exactly what documentation is in your signature pages, and we tell you exactly what you need to do with your signed plan signature pages, how to sign them, what to do with them. So this is a really important document for you. We also give you information about bank and brokerage accounts for your 401k. And then we get into your plan signature pages. This first page here is a resolution of the board for your business. Doesn't matter what your structure is. If you're a sole proprietorship, S Corp, LLC, partnership, you're going to have this resolution, which basically is your company coming together and choosing to create a company retirement plan. You're going to sign here at the bottom, Motiram, as the member. If you have a corporation, this might say secretary, or if you're a sole proprietor, it might just list your name. You're going to sign here. This is you acknowledging that you want your company to create a company retirement plan. The next page in the signature pages is your adoption agreement. Now, this is not your entire adoption agreement. This is just the last couple pages of your adoption agreement that require your signature. Your entire adoption agreement is 72 pages long, and that can be found in this plan and trust. This link is a zip file of a folder of your entire 401k, including your adoption agreement, which is 72 pages long. On the signature pages, we've extracted the last couple of pages that require your signature. So you're going to sign as the employer and the trustee. Motiram, if you add your wife as a co-trustee, then we can update your documents for you and she'll have an additional signatory line here. On the next page is your appointment and acceptance of trustee. This is where you are being appointed as the trustee for your own 401k plan. So you'll sign here on this line and date, and then you'll sign here on this line and date. You are the member and you are the trustee. Or if this is a corporation, this might say secretary, or it might have your name if it's a sole proprietorship. You sign in both places. You sign appointing yourself and you sign accepting as being the trustee. Remember, in a solo 401k, you wear many hats. You're the plan administrator, you're the trustee, you're the employee, you're the employer, you're the participant, you're all these different things. So you're signing on your plan signature pages to make everything nice and official. The next page is your beneficiary designation form. This is where you will decide who is to receive the assets in your 401k plan in the case of your passing. You'll complete this top section here as the employee, since you are the employee of your own business. If your spouse participates in your 401k plan with you, if they also receive compensation, they're an employee of your same business, you want to fill this form out twice. Once for you and your assets, once for your spouse and their assets. And a common question here is your account or plan number is 001. That's because you have the first and only business or first and only 401k plan for your business. Complete your beneficiary designation information here. Who is going to receive the assets? You can list contingent beneficiaries should the primary beneficiary pass away. And then on this final page, you're going to sign as the plan participant and you're going to sign as the plan administrator. Lots of people ask me if this form needs to be notarized. You only need to notarize the beneficiary designation form if you are married and if your spouse is not the primary beneficiary. If you are married and you're listing someone other than your spouse, then your spouse needs to sign this form and get it notarized. Essentially, they're waiving their rights as the spouse to your assets. If you're married, if your spouse is your primary, this form does not require notarization. This next form here is Article 6, miscellaneous. This is the final page of your trust agreement, your 401k trust agreement. So again, if we go back to your dashboard, this link right here to the plan and trust is a zip file. It's a folder. It contains all of your 401k documents, forms, plan, everything. The trust agreement is in this file folder. It's 15 pages long. This final page here is the last page of your trust agreement, which requires your signature as employer and trustee. If your spouse is a co-trustee, there will be 2 signature lines. And now this, Motiram, I think is probably what you were asking about. So appointment of contingent successor trustee. This is where you list an individual who will take over as the trustee should something happen to you and you can no longer continue as trustee of your own plan. If your spouse does not work with you in your business, then chances are you probably want your spouse listed as contingent successor trustee. She probably doesn't need to do a lot of the day-to-day in your 401k plan, but knock on wood, God forbid, if something should happen to you, you want her to be able to take over as trustee so that she can wind down the plan, distribute the assets, and act as successor trustee. For most people who come to us and their spouse does not work in their business and they want to know how to make sure their spouse can be included as a trustee, this is the form that you want. You'll complete this form, list the names of the contingent successor trustee. So maybe your spouse's name would go right in this line right here. Then you sign as the member, and then your spouse would put their name here and your spouse would sign as contingent successor trustee. They are accepting the responsibility of being the contingent successor trustee in your 401k plan. And that's it. Those are your plan signature pages. So that is probably going to be helpful, I hope, Motiram, in answering your question about having your wife be a trustee in the account. Your next question here is, do I need to open a bank or brokerage account after I fund the 401k account? So funding your 401k means you're depositing money into a bank or brokerage account for your 401k. So I think you have those reversed. The first thing is to get your documents from us. You have that, so that's great. Then the next thing is, once the IRS reopens, we will get a new tax ID number for your 401k. At that time, you can open a bank account or brokerage account or both for your 401k, and then deposit your assets into the 401k plan or your contributions. And your final question, anything else I need to do to fund my Roth 401k for 2020? Nope. Motiram, if we had to get a temporary tax ID number, placeholder tax ID number, then there's nothing you can do right now. You just need to formally elect your contributions. I'll share my screen here so we can cover formal election of contributions. So if we go to your 401k dashboard, and then we click on support, this is going to open our knowledge base at support.solo401k.com. And then if I type in formal election, you'll see there is an article right here that walks through exactly how to formally elect your contribution by the December 31st deadline. And it gives you links to IRS sources, a link to our contribution form. So you have everything that you need. I'm going to go ahead and put this link into the chat, Motiram, so that way you can access it simply. And I think that that answers all of your questions. Great to have you with us, Motiram. I hope that this was helpful in answering your questions, and congratulations again. Next questions come from Patrice. Patrice says, I am planning to retire from my employer-based job in January and roll my 401k funds from my employer into a solo 401k in February to operate my business. I'm wondering if there's any advantage to opening the solo 401k now before the end of the year. All the funds will be coming from the employer-based 401k in February. Patrice, I would say you don't need to be in a big rush. If you are not doing any rollovers or any funding until February, I think it's okay to wait to set up your solo 401k plan. Most people who come to us right now, they need to have their plan established by December 31st to capture contributions from their 2020 business earnings. If you don't have that yet, Patrice, then I think it's okay for you to wait. Your next question, Patrice, I have two businesses. Should I have two solo 401k accounts? Probably not. It really depends. The IRS has this interesting concept called a controlled group. This is nerd stuff. So a controlled group is where if you own 80% or more of any business, then all of those businesses are treated as one big business for purposes of qualification, calculating contributions, things like that. So Patrice, if you own 100% of both businesses, then those businesses are probably considered a controlled group. The IRS looks at them as one big business. And in that case, you just need one 401k plan. Now, there are certain accountants that think that it's a good idea to have multiple 401k plans just for clean bookkeeping. That may be the case in your situation, Patrice. So we would strongly recommend that you work with your accountant or your CPA. Just run it by them, see what their take is on things. If you need a list of CPAs that are familiar with the solo 401k plan, we're happy to share that resource with you as you get your plan set up. Okay, and one more question here from Patrice. The funds in my employer-based 401a will be just slightly over $250,000. If my employer allows a withdrawal or a split into two solo 401k accounts, should I do this to keep the rollover under $250,000? Excuse me. I'm over 59 and a half, so I'm not subject to penalties. Just wondering if exceeding the $250,000 will cause delays or other issues. Good question. So again, I do think that this is a controlled group question, Patrice. If the IRS considers you to be a controlled group, and then your CPA said for both of your businesses, and then your CPA says to have two separate 401k plans, then the 250,000 is per plan. So in that case, you could split up your rollover and potentially avoid the 5,500 easy filing. If your CPA says, no, this is a controlled group, you really should have one 401k plan for both of your businesses so you can maximize contributions, then that plan will have more than 250,000, and then you'll file the 5,500 easy. The 5,500 easy is really not a big deal, you guys. It's a simple reporting of your assets, and it doesn't even say where your assets are held. The only thing that the IRS is looking at is totals. They're not looking at where you have your assets. So if we go back to your solo 401k dashboard here, under forms, you'll select 5,500 easy. And this will show you our 5,500 easy generator. We have lots of helpful information here, links to the IRS instructions. We make a guide that gets updated every single year. We have an FAQ here for you that's really in depth and walks you through exactly what you need to do. And then you just fill out this questionnaire. Once you fill out this short questionnaire and click this button, our software will create the 5,500 easy for you. So the 5,500 easy really can just be a matter of reporting your assets. It does not have to be a big deal. Literally tens of thousands of people do 5,500 easies every year. So I don't think that will cause any delays. It does not cause any issues. I think the real root question, Patrice, is, do you need one or two 401k plans? And that's going to be a question for your CPA in determining your controlled group status. Great questions, Patrice. Thank you so much. Okay, let's see what we got next. Kyati says, does my W-2 employer match have any impact on the 20% solo 401k employer profit sharing contribution? No. Employer profit sharing and employer match contributions are totally separate. So Kyati says, meaning, do I need to deduct any W-2 employer match from the 20% solo 401k employer profit sharing contribution? No, you do not. The only thing that counts across all plans is your employee salary deferral contribution. The employer profit sharing contribution is per employer. So that's totally different and distinct for each plan. Whatever you're doing as an employer match in your current employer 401k plan does not affect your profit sharing for your solo 401k. Really good question, Kyati. Thank you. Okay. Next question comes from Willie. Willie says, what form should we use to take advantage of the $100,000 withdrawal if we qualify? Great question, Willie. And I'm glad you're bringing this up because so far, Congress has not said that they are extending the CARES Act deadline, which means that you have until December 31st to do your withdrawal. So Willie, here on your 401k dashboard, it's quite simple. You just select forms and coronavirus-related distribution. This is a self-certification form, so you complete it, stick it in your own records, and then you would move the funds from your 401k bank or brokerage account into your personal account. And this is how you can chart your distribution. Now, for full transparency, we still don't know from the IRS what other forms they're going to require, what they want people to put on their tax return. I think that with the pandemic this year, the government was just trying to get people help as quickly as they possibly could. And the CARES Act was a really intense piece of legislation. It's, I think, the first time that the IRS has allowed that many people to dip into their retirement plans. There's been hardship distributions and things in the past, but this is the first time that sort of unilaterally across the board, anybody could take out money from any type of retirement plan, IRAs, 401ks, 403bs, pretty much without exception. So because of that, it was such a sweeping piece of legislation. I don't think the IRS knows yet, or it's still in discussion, how they're going to try to put that toothpaste back in the tube. Right now, we're telling people, Willie, to treat this distribution as a 60-day rollover. So when you take the withdrawal, you have two options. You can keep the money out forever and then pay taxes over 3 years on your withdrawal, or you can put the money back within 3 years and pay no taxes. We don't have any forms or any guidance or any regulations yet from the IRS on how do they want to chart if people are putting the money back. Are they listing something on their tax return? Is there a special form or a schedule that it needs to be notated on? We don't have any of that from the IRS yet. So what we're telling clients now is treat this as a 60-day rollover that can be up to 3 years. So you take the money out of the retirement plan, you put it back, and then you usually have to chart on your tax return that you put the money back into the retirement plan. So the IRS is not treating it as a distribution. It's unclear whether or not if you take a CARES Act withdrawal, you have to do a 1099-R. I think probably yes, but we don't have any of that guidance yet either. And 1099-Rs are going to be due end of January. So it still remains to be seen, really, what's going to happen with this big piece of legislation. But Willie, for you, if you want to take advantage of that CARES Act withdrawal, fill out the self-certification coronavirus-related distribution form on your 401k dashboard. Good question. Okay. Next question comes from Willie. And Willie says, what is the 2020 401k adoption deadline for an S Corp? Usually it's the end of your tax year. Actually, I don't think this question is from Willie. I think this is from from Kevin. So Kevin, what is the 2020 401k adoption deadline for an S Corp? Usually it's the end of your tax year. Most entities have January to December as their tax year. So in that case, we would recommend that you adopt the plan by December 31st. All right. I think we've got a question here from Sunil. I'm going to go ahead and just read this question and story out, Sunil. And if you have any other questions for us to cover, you can click on this link right here that says ask a question, or you can post a question in the chat and we'll be happy to cover that here. So Sunil says, sorry for the long story. How do we work with these exchanges or crypto service companies when opening a trust account? Like they ask for all of the trust account details, trust name, trust EIN, as well as individual information for the person in charge, like the ultimate beneficial owner, name, social security number, driver's license, etc. In the BlockFi account we opened for the trust, it shows individual information. As they say, the individual is an ultimate beneficial owner, even though the account type is marked as a business account. How does the tax reporting work in this kind of structure? I remember you telling me last time there's no tax returns for 401k trusts, and I'm not sure how end-of-the-year tax forms will be generated in this kind of account structure. We reached out to BlockFi to clarify and confirm, but are waiting for a response. I would appreciate your thoughts based on your experience so far. Really good question. So remember, just getting a tax form is not bad. You know, we have lots of clients that invest in apartment syndications, for example, hedge funds, venture capital funds. It's very, very common, in fact, probably required, that any of these funds or syndications issue tax forms every year to their investors and limited partners. So if you are invested in a hedge fund, for example, you might get a K-1 at the end of the year. If you are invested in a stock portfolio that returns dividends, you might get a 1099 div. That's okay. It's okay to get those tax forms. What really matters is what's the name of the payee. So who's the name of who's listed on that K-1? Who's listed on that 1099? If it's you that's listed, Sunil, and it was 401k money, that's bad. Because what that means is the investor or the crypto exchange account really thinks that account is for you, not your 401k trust. If instead you get a 1099 or a K-1 that's, payable to your 401k trust and uses your 401k trust tax ID number, then that's okay. That tax ID number for your 401k is coded as a 401k in the IRS system. We do that for you when we get your tax ID number. We code it into the IRS system as a 401k plan. So what that means is that if you get a tax form or a 1099 or a K1, then the IRS gets a copy too. But they can see that it's using a tax ID for a 401k. So they're not expecting a tax return. It's completely acceptable for 401ks to invest in alternative assets. It happens all the time. Hundreds of thousands of 401ks are invested in all these types of alternative assets. And sometimes these tax forms are issued. So long as the tax form is issued to the 401k trust with the 401k trust tax ID number, then that's okay. All you need to do is just file that form in your own records. It does not require an extra tax return. I hope that that helps, Sunil. So if you've reached out to BlockFi, you've verified that the account is really a trust account or a business account. It's using the name of the 401k trust. It's using the tax ID number for the 401k trust. Then that should be sufficient. I've invested with Fundrise. It's a crowdfunding platform for real estate. They do REITs. And even when you open a trust account with them, they tell you, hey, we're going to give you a 1099. You're going to get a 1099 and we're not responsible for reporting it. We're just, holding you as the investor. And that's fine. I know that my 401k is who was the investor in those assets. So even if my 401k gets a 1099, that's no big deal because my 401k's tax ID number is coded into the IRS system as a 401k. So the IRS is not going to expect a tax return or tax payments on those accounts. I hope that that helps, Sunil. If you have any other questions for us, you can go ahead. We'll take another moment here. You can post them right there under the link that says ask a question, or right on this side of the page for the chat. You can post any other questions that you have. We are doing these Q&As through the end of the year. So we're doing them tomorrow and Thursday for 2020 to make sure that you have all of your questions answered. And, I'm curious if this is helpful for you guys. We've talked about doing maybe a weekly Q&A call or some sort of an ongoing Q&A for our 401k account holders. It's really nice to have a place where we can all get together and just answer the questions that you have a little bit of back and forth. Sometimes it can be hard to get everything answered on emails. So in having, a place where we can all come together and do these questions, just let us know if you think that that's helpful, something you'd like us to continue into the new year. Okay, we've got another question here from Lipsy. Lipsy says, I opened the solo 401k last week, have docs, but no EIN, which the IRS is closed. I know the bank account and contributions can be made in 2021, but what about the salaries from the employer LLC to be able to make the 25% employer contribution? Can the 2020 salary be paid in 2021 from the employer LLC, or does it need to be paid by December 31st, 2020? Really good question, Lipsy. You need to ask your accountant about this, your CPA, whoever runs payroll, maybe your payroll company. Some payroll companies are okay to issue payroll in like the first week of January, but have it be earmarked for 2020. Others are not. They only want to pay out the payments shown in the calendar year. So I think that it's really important to talk to your accountant or CPA and find out what their specifications are for your business. If they say that you need to pay the salaries, then that's probably what you want to do. You want to receive those salary to your personal bank account or have it earmarked so that it is shown as paid in 2020. And then you can simply move those funds from your personal bank account into the 401k bank account once that's open, because they've already been charted, noted in your books as a salary deferral, and that you've been paid that salary. So I think that that's really important to talk to your CPA, find out what works for your business. Are they okay to hold those payments and then still count them for 2020? Or do they say, no, we need to pay you, we need to do the salary, but maybe that money just goes into your personal bank account and it can sit there for the next few days until you get the until we get the tax ID number for your 401k, and then you can open the bank accounts and then make your contributions. Great question, Lipsy. Okay, last question here comes from Yunhee. Yunhee says, where can I find the recordings of the December daily Q&A? I looked everywhere on the website, but I can't find them. Good question, Yunhee. So you need to look in the 401k network. And what I'm going to do is share my screen with you, and I'll show you exactly where they are posted. So if we go into the 401k network, that's here at solo401k.net. Then you're going to want to go into groups. Once you're in groups, then you can click on December Kickstart. And this is where we post all of the Q&A sessions. So you'll see we've got some great questions here from other members. Edward, Lipsy, great to see your questions coming in. Love that. And then if you scroll down, you'll see that we've got the Q&A videos. Bam. There's the one from yesterday. Then we've got the one from the 27th, the one from the 26th. So Yunhee, this is going to be right in, just so you know how I got here. Go to solo401k.net, click on groups, and then December Kickstart. And then you just need to look in the activity feed, and you'll see that that's where I'm posting these Q&A replays every day. This is also where people are posting questions. It's a great place to have your questions answered by experts. But the Q&A replays are all here for you so that you can access them at any time. They're all right here. So great question, Yunhee. I hope that that helps. And yeah, if you have any other questions, just let us know. We will be back tomorrow at 3 p.m. Eastern time for these daily Q&A sessions. Remember, we're doing these through the end of the year. So we've got tomorrow and Thursday. Our team is off on Friday. We are going to be off on January 1st. It's a much needed break for our awesome, hardworking team, but we will be back at it next Monday, getting all of your tax ID numbers from the IRS and making sure your documents are properly updated. So if you're brand new to us, make sure you get your application in ASAP. It's really important that you get that in as soon as possible, so that we can prepare your documents by the December 31st deadline. We got one more question that snuck in here from Willie. Okay, Willie, I'm going to answer this question, and then we'll wrap up for today. Okay, Willie says, what if I've created another account in cryptocurrency with the same EIN and structure of the current 401k? Do I have to show that the funds came from an existing 401k? And if both accounts are over 250, do I treat them separately? I don't understand this question, Willie. What if you created another account in crypto with the same EIN and structure of the current 401k? Do you mean you've opened a crypto exchange account for the solo 401k and that is using the tax ID number for the 401k? Is that your question, Willie? Just tell me yes. Like you opened a Coinbase Prime account, for example, in the name of your 401k trust, and it's using the 401k trust tax ID number. Give me a little bit of clarification here, Willie, on that. Yes. Okay, awesome. So, Willie, think about your solo 401k like an umbrella, and it can have unlimited depository and holding accounts underneath it. So let's say your crypto exchange account for the 401k has 200,000, and then you have a bank account for your 401k, and that has 100,000, and then you have a brokerage account for the 401k, and that has 50,000. The total value of all of those accounts is 350. So it's not the value of each account, it's the value of the 401k. And all of those accounts belong to your 401k. Another way that people have addressed this is, let's say I own 2 rental properties. Those properties are worth $150,000 each. And let's say I have each of those rental properties in an LLC owned by the 401k. Well, and maybe I only have 50 grand in a 401k bank account. How much is my 401k worth? Is it worth the 50 grand in the bank account? Or do I have to add up all of the assets in the 401k? The answer is the latter. You have to add up all the assets that are owned by the 401k. So even if my 401k owns LLCs, and even if those LLCs own rental properties, the ultimate beneficial owner, just like Sunil was talking about, is the 401k. So even if I only have 50 grand in a 401k bank account, if I have other funds in 401k assets, like a crypto exchange account, a brokerage account, real estate, private notes, things like that, all of those are owned by the 401k. So that means that those are all part of the 401k plan value. So in this case for you, Willie, if you have a solo 401k with a crypto exchange account and that has over 250 in it, and then you have another brokerage account for your solo 401k and that has over 250, your total solo 401k value is, more than 500. In that case, your solo 401k needs to file a 5500 easy. I hope that answers that question, Willie. If you need any more clarification on that, let us know. We will be back tomorrow at 3 p.m. Eastern time for our daily Q&A sessions. We're here Wednesday and Thursday. We're off on Friday. And then, let us know if these Q&As are helpful. I think it's probably a good idea to continue them with some sort of regularity. I don't know what that schedule looks like yet, but it's really nice to have a place where we can come and hang out together and answer your questions. Have a wonderful rest of your day. You guys are doing awesome. If you are new to us, make sure you get your solo 401k application in as soon as possible. You can fill out that application right on our website at solo401k.com. If you have any other questions, post those to the network, bring them to tomorrow's session, and I'll see you tomorrow.